Like buying Tesla under $1, this is your chance to get in early on a penny stock that is in the EV sector, along with other 5 diversified sectors that are very hot right now and growing very rapidly. This is a penny stock that has had substantial revenue growth since 2018. As you can see right here, they are predicting to, even surpass 120 million plus revenue for 2023, and they only have a $50 million market cap. So that tells you they are extremely undervalued. This is one that I've been covering for a very long time. They have 5 diversified business lines. They have completed around 12 plus acquisitions since 2018. And ever since then, they have been growing very rapidly, and they actually have an active pipeline of future acquisitions and mergers as we speak right now. So a lot of big catalysts coming up. They produce EV motorcycles and a mid-speed EV car. That's only 1 out of 5 of their diversified business lines. So you definitely have to check this one out. Guys, make sure you like the video, put notifications on, everything like that. I'll also be going over multiple different small cap and penny stocks that have a lot of potential. So definitely stick around and watch the entire video. So one stock we have to talk about is ticker BFRI. This one's trading at just under $10, but this is a very important one to watch because they just had a reverse split just I believe on July 3rd or something like that. At the beginning of the month, they only have 1.3 million outstanding shares. I believe the float is around 800,000 or less, or 800,000 shares or less, but either way, a very small float because of this reverse split we just had. So the market cap is at $12.3 million, which is very low, and they do actually have revenue. They do have $25 million in debt, but $50 million in assets. And with this is a pharmaceutical company that does have products and does have revenue. Their revenue is going up year over year for the last 3 years. So this is something that I want to look at, especially for their $12 million market cap, and considering they just had a reverse split. This one might be bottomed out, $18.8 million in 2020, 24 million in 2021, and 28 million in 2022. And not only has their revenue went up, their profit margins, their net profit margins have went up a lot as well. As you can see in 2021, they lost a lot of money that year in terms of net income, and then the next year after that, 2022, only lost 640,000. Keep in mind you always add 3 zeros. So from that standpoint, they are doing better. They just had a reverse split. The float is very small, so this is one that could have a very big run considering the small float. And just definitely one we have to watch right now that could be bottomed out. Definitely put it on your watch list. The issue with this stock is there's no volume, but if there is some news or a catalyst that come out, or this one just gets trending, people start noticing this one can easily double, hit $15 very easily. Not saying it will happen, but it's definitely possible with the tiny float. Just need some volume. And every quarter they do like to keep cash on hand, which is very positive to see. Looks like for the first quarter 2023, they had around $13.5 million cash on hand. This has been going down for the last few quarters, but they still have millions of dollars of cash on hand, which is good to see. It's still early in the morning, so this volume just needs to pick up for this one to have a big move. But with their tiny micro float, this is definitely one you have to watch. Definitely keep it on your radar right now. Come out this ticker IQST, IQST Inc., trading at 30 cents. I have been covering this one a long time, and 1 month ago I called this play out at 12 cents. So it's more than doubled since that post, or since that video just 1 month ago. Even with this run, I think this one is still very undervalued with what they are capable of. I have a PR that I did cover in my last video covering this company. Q2 revenue exceeds expectations, increasing 32% to $32.5 million for Q2 revenue. This is a very positive sign. I'm going to tell you why, because this company over the last few years, the last 4 or 5 years, or even just the last few years in general, and historically speaking, their last half of their fiscal year is always better than their first half of the year in terms of their revenue numbers, everything like that. And they are working on their margins too. That's something they really need to work on, but they are working on this right now. So this is one that has a lot of potential. Their revenue has been growing, and I just have to make another video on it. This one, the price has been going up. It has been justified a little, but I still think this one is undervalued even with this big run we had here. Next up we are talking about is Workhorse Group Inc., ticker WKHS, trading at $1.28. This one is down in the last year, down around 70%, but yesterday had a big run up around 20%, and today is in the green. So it's good that this one is in the green as of right now after that big run yesterday. You have some positive momentum, still losing $20+ million in net income each quarter. One that doesn't really have the revenue to keep up with their expenses, but they do have $80 million cash on hand. They do have a very high market cap of $258 million. Their market cap is pretty high considering their revenue and everything like that, but looking at their share structure, you don't really have to worry too much because their authorized shares compared to their outstanding shares are almost capped out, and they do have $80 million cash on hand, so they would have to raise this one to really dilute a lot of shares. So this is one that, you know, on a cash standpoint, they are good for right now, but, you know, there is a big concern. They will need funding in the future because that really, you know, they are good, you know, for maybe a few quarters, something like that, but they will need funding in the future unless their revenue just really picks up. But I don't see that happening. As you can see right here, they only did $1.7 million in the first quarter, and their gross profit margins was negative $3.6 million, and they lost around $25 million in net income just from that quarter alone. So obviously they will need funding very soon. So it looks like they will have to dilute shares and raise their authorized shares at some point unless they get some kind of good funding, but I don't really see that happening. Their revenue numbers just aren't there to keep up with their expenses. Like I said, just depends on how their revenue increases as well, but it looks like they will have to raise their authorized shares unless they get some other form of funding to get them through whenever they burn through all this cash they have right now. That's something we really have to pay attention to when that happens. Are an electric vehicle delivery company. They do have delivery drones that are fully compatible with their, you know, electric vehicles. About 3 weeks ago, they announced Smyrna Truck to be their first certified dealership in Georgia. Just 1 week ago, they engaged Burr Truck and Trailer Sales as its first distribution and service partner in New York. So they are very busy, have some PRs. Main concern is they have to get their revenue up, and they have to do it very quickly because they only have $80 million cash on hand, and they will burn through that pretty quickly. So the most important thing is their margins and their revenue have to continue to improve, and they have to do it pretty quick, or they will have to, you know, dilute more shares, which looks like they will obviously have to do anyways, because I really don't see their revenue shooting up that high. I really don't know what this stock will do in the short to medium term. Don't really know if it will keep up this momentum, but it does have momentum as of right now. Don't really think it will last, you know, unless they have some really good numbers that come out that beat their expectations. But keep in mind, they always have very high expectations when it comes to their quarterly financials, and usually when these financials come out, they don't actually live up to their numbers. So we'll have to see how that We'll just have to see how that plays out. But either way, that's it for the video, guys. Let me know what you think about these plays in the comments, everything like that, and I will see you on the next one.